Hello, welcome to the third lecture today. So we are considering next use case of blockchain penetration into infrastructures at the level of e-governance. And this use case is about taxation system and the recording of taxes. So taxes usually is a very complicated topic. So in Norway, we used to say that the person needs to take a PhD in how taxes are calculated in order to understand, to get initial understanding of the system. So it looks like in India, the taxation system is also quite elaborate. So it's so important because gross domestic product or GDP of any country is highly dependent on the tax paid by the citizens of that country. And the tax payments are obviously compulsory and need to be enforced. There are many various entities in the taxation system, public and private sectors, where the rules may be somewhat different. Individuals, wholesalers, retailers, tax authorities, banks, and so on. So taxes, so here's just an example of some of the taxes, well rather, it's more or less a complete list of the types of taxes, not the exact taxation rules. So there are direct taxes on the income tax, and there are indirect taxes, for example, on the sale tax and service tax, and custom and VATs and goods and services tax, which we are going to consider in greater detail later. So what role can blockchain play in the taxation system? It can be used for storing and validation verification of invoices, can be used for verification of payments, automation, for example, automatic calculation of reminders, fines if there is any delay with payment of taxes, and so on. Of course, tamper-proven and security of records, verification and validation of the tax forms, cross-border transaction monitoring, and of course, if built successfully, such a system would contribute to building of trust. And of course, it eliminates some human bureaucracy and thereby may bring reduced compliance costs. So here in this illustration, you see an example of a VAT system built on blockchain. So in this particular system was built on top of Ethereum. It's also using the IPFS storage, which is a blockchain-assisted storage. I'm going to cover it tomorrow in my last lecture. And the system, of course, in the system there is VAT administrator, there is seller, buyer, and the bank. Those are the main entities that interact and store information on blockchain. So here are some examples of successful uses of blockchain in the tax system. So like spread over different countries. In Brazil, there are actually two interesting use cases in Brazil. The first use case is the Federal Tax Administration of Brazil implemented a system based on blockchain. So it's called BCPF. And the point of the system is to share data from a registry of taxpayers between tax and regulatory institutions of the three levels of government, including federal, state, and municipal. So it's mostly for sharing the data and verifiability. The second system developed in Brazil is for custom tax. So Mercosur Customs in Brazil is connected by BConnect, the blockchain network, for the purpose of Federal Tax Service of Brazil, and connects customs in Brazil and nearby countries of Argentina, Paraguay, and Uruguay. So the purpose of the system is to guarantee the authenticity and security of custom data shared between the Mercosur countries, the 4 countries, and it allows the exchange of information from economic operators. Another example is from European Union. In the European Union, there's been a proposal to create a digital invoice register, which would allow tax authorities across Europe to view and verify the taxes paid when a product changes hands. A few additional examples. Argentina, which was also part of Mercosur, it implemented a single tax registry, federal register, which is abbreviated as RAT, a tax simplification mechanism that allows taxpayers to comply through the same channel with the formal requirements of tax registration, declaration, and so on. A few additional examples from Europe. In Finland, the tax authority started working with banks on a blockchain system to track taxes on real estate transactions. In Sweden, blockchain is being tested to digitalize receipts and non-resident income tax and custom duties. Probably the two most advanced countries in Europe in terms of the blockchain penetration and regulations are Estonia and Netherlands. Estonia has moved a number of government services to a blockchain system, including banking, health, and business records. So a significant part of the national Estonian infrastructure is based on blockchain. Netherlands is one of the countries that has been promoting blockchain-related legislation in Europe. They've had many success stories. One of them is that they started working on blockchain-based accounting system that tax administrator could use to combat fraud when it comes to the VAT tax. But now let's come back to the Indian context and specifically consider the GST tax, which is one of the many taxes in the Indian taxation system. So GST is an abbreviation for Goods and Services Tax. It's an indirect tax which replaces former taxes in India, such as excise duty, VAT, services tax, and so on. It went in effect, so the GST Act was passed in the Parliament in 2017 and came into effect later same year. So it's a relatively new act and a relatively new taxation system. The tax is being levied on the supply of goods and services. It's comprehensive multi-stage destination-based tax that applies to every value addition. So you can see the illustration here from the Clear Tax website. So clear doesn't mean that it's all clear, it's just the signature of the organization that produced the illustration. So for example, when buying raw material, manufacturer buys a raw material, VAT applies. When manufacturer sales the end product to wholesaler or to warehouses, VAT and excise duty would apply. And from the wholesaler to or warehouse to retailer, VAT would apply. And finally, the consumer would also need to pay VAT, and always covered by GST. So the tax is levied at every point of sales. You could saw in the previous diagram. And what's interesting is that it applies differently in the case of interstate sales and interstate sales. So in the case of interstate sales, there are two components: central GST and state GST. And in the case of interstate sales, are chargeable. The tax is chargeable to the integrated GST. So integrated GST goes to the central government. So in this case, the taxation, in the case of interstate sales, the taxation would be a bit different. So here's an illustration. Suppose a dealer in Gujarat has sold the goods to a dealer in Punjab, and the goods are worth, say, 50,000 rupees. So, and in this case, the tax rate for interstate tax is quite high. It's 18%, comprising of only integrated GST. So in this case, the dealer has to charge 9,000 rupees as IGST. And this revenue will go to the central government. Now, a different scenario would be if the same dealer sells good to a consumer in the same state, Gujarat, which would be worth 50,000. And then the GST rate on goods is 12%. And this rate comprises central GST at 6% and state GST at 6%. In this case, the dealer has to collect 6,000 as goods and service tax, of which 3,000 go to the central government and 3,000 will go to the Gujarat government. So this is an example of a calculation, and of course, all this needs to be automated. So here comes a blockchain network, again, developed in the Indian context. It's called GST Chain. It's a conceptualized, designed and developed, again, by the same entity, Center of Excellence in Blockchain Technology, National Informatics Center, to record and store the tax-related documents in secure manner using blockchain. So what's the purpose of blockchain? GST details, so it stores details such as tax payment, demand, liabilities, invoices, notice, bank payments. All this is stored on chain, or at least secured by the use of chain in a hybrid storage. The documents in the off-chain database would include tax payment and the invoice, but say the hashes of the documents stored in the off-chain database would be stored on chain for the purpose of extra security. And there are many entities that participate in this system. Again, the government, suppliers, recipient, GST officers, monitoring the blockchain data, and the financial institutions themselves. So this brief presentation of the use case was prepared using a number of references from the very same Center of Excellence in Blockchain Technology, and but also from a number of papers, such as Navigating Blockchain Technology Integration in Tax Policy, Navigating Challenges and Unlocking Opportunities for Improving the Taxation of Ghana Digital Technology, and Automated Tax Return Verification with Blockchain Technology. That concludes the lecture. Thanks for your attention.